In this video, I want to talk about my favorite day trading indicator. I use it pretty much on all my charts. It's not a necessity. I don't look at it for every single trade. I don't make it give me, 100% certainty to enter a position. However, it's a very good tool to be on the right side of the market, understand the psychology between other participants, and get in the market when opportunity is present. I'm going to explain how to get this indicator on your charts, and I'm going to explain how I personally use it and make trading decisions off of it. So if you've been following me for a while now, you all know I have this buying and selling indicator. I get tons of messages every time I post a video. And this is my favorite indicator. You all know I'm not very fond of any other trading indicators, especially ones which are not price and volume related. Price and volume lead the market, so anything that is non-price and volume related are really going to lag and skew your risk to reward and skew your trading decisions. So the first thing that I would like to highlight is the indicator sorts data between upticks and downticks on the time it sells. This is different than a normal volume subgraph because it's going to give us colors which represent upticks and downticks on the time and sales. Now on ThinkorSwim specifically, if we pull up a time and sales, ThinkorSwim does not sort data between bid and ask. Meaning, when we see a red order on the time and sales, this does not mean a sell order. All it means is a down tick, meaning price is at the same level or lower than the last ticket if it's red. And if it's green, it's not a buy order. It is just saying that the market has had the same price as the previous ticket or a price higher than the last ticket. So it does not sort data between bid and ask. It is not a true bid or ask platform. However, it will show uptick or downtick, aka buying or selling pressure. I want to say maybe 80-90% of the time, if we do see a green print come through, it's going to be the same or higher. We just don't know if it's a buy or sell. That's why this is just going to show pressure between buyers and sellers. With this being said, like I said earlier, it's not magic. It's not something that I look at every day, all day, and I make every single trading decision off of. It's just another tool to implement and add to your arsenal. And this is very key, I only use this at key levels of interest. If you've seen my other videos, I have a saying where my supply and demand zones or key levels give me my area of interest. And I must use price and volume to tell me why and when to enter. This is a scenario that will help me get my why or when I should enter that position. So it's very vital to use this at areas of important interest in the market. For example, here is the NASDAQ, and the market began to sell off of the highs, and we had a demand zone over here at 11848. Now, how I use this setup, and the first setup that I do characterize this indicator off of, is for reversals. I love reversals. I love buying when others are fearful, and I love selling when others are getting greedy. When someone is in pain in the market, someone's on the other side of the trade gaining from their pain. So I love, if you hear me ever say, I love buying when others are selling, selling when others are buying. This is kind of what I'm talking about because others who are selling are providing liquidity for other traders who are smart and buying passively on the other side if we're talking about the market beginning to sell off. So in this example, the NASDAQ begins to sell off. We have our area of interest, which is our demand zone, and we see a large amount of volume as the market comes into this demand zone. Now, what this tells me, especially that this indicator is starting to turn red, and we see even more red selling pressure as we sell off from the highs in this area over here, is majority of traders are feeling bearish. And this is key too, is I always put myself in the perspective of a retail trader's head, understand where they're buying, where they're selling, where their stop losses are going to be, because that's going to give us a serious edge in ourselves. If we just do the opposite of them and buy when they're selling, sell when they're stopping out, and vice versa. So as the market's selling off, we have this demand zone, and if we don't have the knowledge of supply and demand zones in this case, we would have thought, because honestly, this chart does look very bearish. We're selling off, we're going towards the low a day, and we're selling off right into a demand zone. When others are selling a position aggressively, downticks on a time and sales, maybe sell orders, market orders hitting the bid, someone has to be buying from all those sellers. So when I see a very large red bar like this, especially inside a demand zone, and I do not see continuation to the downside, very, very key right there. So if there was continuation to the downside and the market kept increasing with higher volume and more selling pressure, then yes, the odds that the market could have kept going lower are very high. However, in this case, majority of traders were selling or shorting the market on a move to the downside, not realizing we were inside of demand, selling high volume inside of demand zone with no continuation to the downside, followed by a strong buying pressure out of the zone, indicates a high probability of the market reversing. It's not magic. It doesn't work out 100% of the time. It just gives us a good clue about the market auction and understanding the agenda behind participants in the market. Now, on my Instagram, at Investortrade, I'll actually post a link in the description below to follow me on there. I definitely recommend doing so. But on my Instagram, a few months ago, I posted a screenshot about capitalization. And essentially, this is what I look for. So the market aggressively sells off. We see a very large volume spike, very large and sharp price decline, yet the market could not move any lower. And then the market begins to move up. So the first clue, same thing for the upside. But for the downside, if the market sells off with heavy selling pressure and the market does not have continuation, we stall out, maybe buying pressure steps in and the market moves up, this is a good indication of high volume capitalization and a high odd of a potential long side reversal. Why this happens is because majority of retail traders, they're panicking, they're fearing, they're aggressively hitting the market to sell their position, and they're causing selling pressure in the market. It's the max pain for other traders. Smart money and big money are like snipers. They wait for the selling to slow down. They support the stock by buying on the other side, absorbing all these sell orders, or they just cover their sell position and buy back and the market spikes up, and this gives us a good indication of a potential reversal to the upside. And you flip it to the downside, large volume spike to the upside, yet price cannot move any higher, good indication of a short side reversal. I definitely recommend checking that out on my Instagram. In fact, if you want, I could send this indicator to you all. I'm sure everybody's going to want it watching this. If you do, 3 things I ask: subscribe to my channel, drop a like on this video, and message me on Instagram that you want the indicator. I have no problem sending it to you at all. YouTube does not like if you comment your emails in the comments. So just messaging me on my Instagram will definitely work better. I'll send them out as best as I can, as fast as I can. If you are a member of the Investortrade community, the indicator link is in the ThinkorSwim tab. If you don't want to message me on Instagram, it's in there. But the first indicator is a reversal and understanding why majority of traders are selling, fearful, not realizing we were inside of demand, my area of interest, and buying pressure comes out of the market, indicating a short side reversal. So how we could enter this trade is 2 things, and it really depends on how you trade. And I seriously recommend testing this out first and see how you could fit it in your style. Don't just jump right into it, because you could use this on a 1 minute. You could also use this on a 5 minute. I really wouldn't go higher than that. I haven't found it to be reliable. 1 minute or 5 minute, depending on how you trade and depending on the market conditions. 2 things right there that is important to understand the time frame. So we could enter when we start seeing buying pressure coming into the market. This might be a lower quality of a setup because we really haven't seen so much confirmation just yet, other than high volume and buying pressure out of it. Or we could just use this as context, wait for more information to develop, and maybe wait for some structure to form and maybe get long above this little high right here after this consolidation. Because if you actually look at this, more buying pressure came through, indicating interest at higher prices. And we had a nice little, could have capitalized on a 50-point rally out of that. So it really works best for reversals in this manner, and you could scalp a quick move depending on your time frame. Example of putting yourself in the perspective of retail traders is, it doesn't get much better than this right here. So the market is severely downtrending intraday. We're putting in lower lows, we're putting in lower highs. Every single time the market tries to move up, we fail. So what I mean by that is try to move up here, fails. Move up here, fails. Move up here, fails. This indicates weakness in the market. So with this in mind, a lot of traders find it easy to short a lower day break. Let's just say it's the easiest thing to do. You mark a low and you short it when we break a low. In some markets, especially balanced markets with lack continuation and lack trends, this is not a viable strategy in the long run. So in this case, if you just look at this, that every single time the market breaks the low, right? Create a low here, we break it. We break the previous low, we fail. Break the previous low, right? There's zero continuation to the downside. With this in mind, now we come up with our level of interest. This is our demand zone, let's just say. The market breaks the low inside of demand. Look at this. This is the highest volume of the day besides the open candle, which is the highest that you're going to see in the day period, pretty much. Buying pressure as the market is moving lower inside of this demand zone. So what this tells me is somebody else is on the other side of the market, forcing the market to move higher. As we move down, we see a flux of upticks or green ticks on the time and sales, indicating a possible reversal in the market. If we were to just look as soon as we come into this demand zone, and keep in mind, these zones are here before price even trades at them. One of the highest buying pressure volumes of all day. We get it inside of demand zone, and you could have capitalized on a nice little quick intraday scalp off of that bounce off demand, high buying pressure, and high volume to the upside for continuation. Now, the next way I use this indicator is for breakouts. Now, breakouts are important to see volume because if you are expecting continuation in the market, what's going to bring continuation is increasing volume in your direction. Whether you use this indicator or just any volume, how the market works is if prices are moving higher and you're expecting continuation, you want to see more volume leading into that breakout and above that breakout level, indicating there's more interest, there's more people buying, there's more people selling above your level. When there's more interest, there will be more continuation. As interest brings volatility, volatility brings momentum, and that's when we get the large price continuation moves. So in this example, here we have Tesla. I just want to show you the levels. I posted this in my Discord. But on Tesla, on this day, we were watching the 297.50 area to break out. Above it, I'm going to be interested in playing calls targeting 300. I'm not a huge breakout trader because some markets respect breakouts, some don't. However, if I am trading breakouts, it's vital to see volume increase prior and during that key level breakout. So Tesla came up to this 297.50 area. We consolidated a little bit while volume died down, completely fine. Volume before that started to increase as well. It wasn't at my important level of interest. So other than supporting the thesis, it's not giving me a reason to enter other than providing me with context of what's going on in the market and other participants, what they feel about the auction. So then we consolidate and then we get the breakout. Now, what's important here is prior to this breakout, volume begins to slowly start expanding as price begins to move higher, and then we get that breakout. Now, if you were watching the time and sales during that breakout, you would have seen a lot of green prints coming through, indicating market participants buying at higher prices or selling at higher prices. All it indicates to me is that the market is moving higher. And if more volume gets done as we break out above this level and we start to see green pressure come through, this is giving me a good indication that there's upticks, price is moving higher, and if price continues to move higher and builds up interest and participation in the market, that's when we're going to get a continuation. We had a strong volume push on that candle that broke out, more buying pressure above that, and then we got our 300 target, which hit for a quick little scalp. The market pulled back. We started to see more strong volume near the high. We're still above our demand zone, still above our levels of interest, and then the market moves up. And this is really not relevant information for me anymore to enter a trade because the move that I was looking to enter happened here. We got our volume confirmation, and now this is not in my important area of interest. This is just showing higher volume done at some other point. Another good example of a breakout is here we have Netflix. I did not take this trade, but we have resistance over here that kind of formed a double top in this area where we have a high and another high. Look at the volume prior to the breakout. See how light it was? And then look at how once we started breaking above this little double top or this resistance at 233.38, look at the buying pressure and just look at the overall size of the volume bars as the market breaks out. That is something you want to see if the market is breaking out in a specific direction. Strong buying pressure indicating interest at higher prices. That's when we get our continuation. That's when our option premiums spike because there's volatility. And that's when we get clean moves that are stress-free in the market. And the last thing this indicator shows is the daily previous 30 days average volume compared to today's volume so far. So if we see a lot of volume, maybe at 10 o'clock or 11 o'clock, 2 hours into the market open, and we've already done 75% of the daily average, 80% of it, whatever the case may be, and we're coming up to the daily average early on, and that's going to maybe give us a good indication that the market is setting up for continuation or a trend, as higher volume indicates higher interest and higher participation in the market. So this daily average is another little icing on the cake that kind of gives it more structure to this indicator. If this video helped and you want the indicator, like I said, I would appreciate it if you could thumbs up this video, subscribe to the channel, and you have to message me on Instagram. It's the easiest way I could send you all the indicator if you would like it. But I'm ending it. Peace out.